Hi, welcome to this video day, which is on the 27th of June. We're on Saturday. Just going to be taking a look at the US dollar today. We're going to look at several USD pairs, which we think could offer really good risk to reward trading opportunities in the coming week. We'll go over to the charts in a moment. Now, in terms of last week, in a couple of videos, I did feature some USD pairs. And I was saying I felt the USD was getting ready for a big move to the upside. Last week, the dollar did move up a bit, but it was a fairly low volatility week. The week ahead could be very different. And the reason it could be very different is the dollar just generally has remained soft over the last couple of months due to stock market strength. Yeah, stocks go up, the risk currencies go up against the USD. But now we're seeing some stock market weakness. We're testing a key level. If that level gives way, then you'll see big volatility in the Forex markets, and the US dollar should have a really big move to the upside. But even if stocks remain firm, the dollar has got little downside. It is just so oversold. Right, what we're going to do is we're going to go and look at the charts, but just before we do so, please do keep in mind, it is my view as of this specific moment in time. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, just click on the link beneath this video and you get live access to our member center. You can also follow us on Facebook and join our Facebook group. In terms of stocks potentially going lower next week, there's plenty of posts on my Facebook page and also in the group, so check them out. But what we will do now, let's go take a look at the pairs. So I'm going to start with the majors and Euro USD. Right, first chart, Euro USD, and this is a chart from our member centre. I've updated, this for anyone who's a member, I've updated all the USD pairs today, and I'll be doing the crosses by 1 p.m. tomorrow. Now, in terms of this pair, this looks pretty boring at the moment. If you're just looking at the technicals, all you've got is a bit of choppy sideways action. But when you look behind the chart, you can see the potential for a big downside break. Now, before I talk about the fundamentals and sentiment behind the chart, I just want to show you this chart here, which is a look at the COT net traders positions, which is our favorite smart money tool. This one is adjusted for open interest. Many people who follow us regularly probably don't recognize the way it's displayed. But in terms of this chart, what it's got is two groups. Okay, dealers, they're effectively the smart money, commercials, the hedgers, speculators, for want of a word, dumb money. And what we're looking for on this tool is big divergence between the two groups. And when the euro rallied up, look at the speculators buy that rally. The commercials came in and sold it hard. There's a big divergence between the two groups. It's the biggest one since here, back in March 2018. You can see similar divergence. The euro tops out and then goes down around 1,000 pips, or about 700 if you don't count that rally there. So 700 really in a straight line, effectively, or near enough a straight line. So why are the commercials so bearish? Let's shift back to the chart. If we look at this rally here, that was all to do with enthusiasm about the EU Commission proposing a rescue fund of 650 billion euros to help the nations out, poor nations in Eurozone who are in trouble. The market took that as euro positive. Said at the time, it's probably not even going to get approved. Even if it does get approved, it's too small to solve the problems in Eurozone. So good news in the price, also a little bit of support from stock market strength, but the euro has come down a bit, a little bit of a rally, just doing really nothing in the last couple of weeks. And yeah, our position hasn't changed since last week. We've only got 64 pips open profit, but I've got a feeling we are really going to motor to the downside. Now, if you're coming in fresh, it's easy to trade this one. Sell back to 113 on topping action up here at this first level resistance. You got trajectory in the middle, but this level here is quite big. Our stop is back behind the level, second level resistance. Or if we don't rally, just go through the tail low here. So below a round number 111.80. And I think we should quickly, hopefully, go down to 110, then down to chart lows. Don't be deceived by the low volatility and choppy trading here. I think a big breakdown is coming and upside is limited. Right, GBP USD daily chart. This one's moved a little bit in our favour, about 130 pips. Big levels to key off are pretty easy to see. Let me just go through the chart. You get the big move up in the pound there. When we come down, if we're bearish, we're always looking for this line to break. The green line, which is a 20-day moving average. And basically we bounce off it on the blue. And then we come through on that red, down. Blue, back to test. Can't get through, red rejection. Off the 125 level, then now we're down at 123.29. Now, the big levels are 124, 125, round numbers, okay? So you can sell back to 124, look for topping action, or if we go back to 125, that should be a really hard level to take out, okay? Or you could just do continuation through the next round numbers. So go through 122.80 with a stop behind 124. I still think that's 300 more pips on the downside. In terms of the pound, more downside on the dollar, but I think it's a good risk to reward buy in some of the crosses. Okay, but against the dollar, we are bearish. Now, in terms of next pair, AUD, USD, this is getting ready for a big move. Had a really big rally up, and I thought we'd top out into 65, but we blasted that out, went up to 70, and now we're kind of going sideways. The 70 level, tried to get clear of it, couldn't. Sorry, exhaustion, red poke up, blue poke, but you also got support here. So you got a little bit of a channel, choppy sideways action. Volatility, you can see on these outer Bollinger Bands has dropped down. This is, for us, going to have a really big break to the downside. I'll just show you the COT net traders positions on this one. See the commercials come in here, and they actually buy the rally, which runs well over 1,000 pips. Well, the speculators go short. But now look at the commercials or the dealers. They've shed their long positions. Speculators are coming to buy. So we think the commercials, coming in to sell are indicating a top. Speculators going long against them, obviously. Now, in terms of why commercials dealers, basically, bearish of the Aussie dollar. Well, the Aussie dollar has literally really benefited from stock market strength, and also from the view that Australia economy will not suffer so much in terms of the pandemic fallout as other economies. That is totally flawed because if you look at the Aussie economy, it's just exposed to global trade and global growth. It's heavily sensitive to that. And of course, global growth and global trade, in our view, not going to recover quickly. There's a lot of optimism we could get back to nice growth next year. No, it's going to take years. So the Aussie very, very vulnerable to a breakdown. So you can sell through this level here or look for topping action into the 70 level. We shall see. Last pair, which is going to be USD, another commodity currency. And this one, the US dollar is already showing decent strength on, and we've got a reasonable profit on it, about 250 odd pips. And you're seeing it a lot in dollar pairs. Dollar does sell off hard. She bounces back above this level here, which is a big level, and then she's been chopping sideways. Okay, you get sideways channel, then you get a little bit of breakout. Going higher. If that goes through 137.30, just through the next round number, should go up to 142. If we come back down, look for the 20-day moving average to provide support. Canada, another commodity currency like the AUD, is going down in our view. Right, they're the main majors. Now let's go and take a look at some other USD pairs, some of them lesser looked at, but there's some really great risk reward trading opportunities. So let's go and take a look at them. Right, some more USD pairs, and in terms of this one, it's USD NOK, a lesser looked at pair, but it's probably on your trading platform. And this pair just looks a really attractive risk to reward to us. Yeah, you have the big dollar sell off over under the downside through these lows here. Then you get a big blue that bounces up like the big blue did there to clear 950. A little bit of a struggle to take out the 20-day moving average. We've moved kind of away from it. In terms of this one, it's a buy through the high. And at the moment, we've got to stop back here behind the 20-day moving average. But if we start moving to the upside, we'll probably bring our stop behind Friday's candle. But even from current levels, it's offering about a 5-to-1 risk to reward. Many USD pairs are offering that. From the way we see it, that means you get 4 trades wrong, 1 right, you break even. Get 2 right, you'll have some profit. Yeah, the euro goes down. The euro proxies tend to go down quicker, and I think the NOK could take a real hit. And I really like the look of that trade setup. Let's go to the next pair. This is an extremely volatile pair, but sells off. Then we come back above the 22 level, big blue, red down to test. You're basically around the 20-day moving average. Exhaustion tail there, up, back to test the 20. Then a breakout from the sideways action. Finish near the high of the day on Friday. If we open blue, I think that's going up to there. But if she gets motoring, just bring the stop up behind the low. But this one's about a 4-to-1 risk to reward. And keep in mind, in terms of exotics or emerging market currencies, if you get risk off, stock market weakness, then basically they're the ones that go down the hardest on the USD. Only small positions are needed because of the volatility you get in the exotics, but small position could yield some really nice profit. So we'll see if that breakout follows through. On Monday, the next pair we're going to look at is another euro proxy, which I really like the look of, which is the Czech krona. Again, a big sell-off. Then we get the sideways channel with prices, holding support. A little bit of a struggle around the 20, just above it, but volatility very low. Low volatility points to a big move. If we break out, we'll go to chart highs in our view, and we'll bring our stop up behind the 20-day moving average. So that's a really nice looking risk reward trade. And also similar setup is US dollar against the Polish zloty. They both kind of move together. Both look very good trade setups to us. What do we got next? We will have NZD USD. A bit similar to AUD USD, really. Nice big strong move up in the Kiwi. Meets resistance, down, bit of support, 20-day moving average coming in, push up just below the 20-day moving average, but volatility very low. Need a break through this level here, which is 63.70, and then we're looking for a big decline. We'll probably put our stop behind that big red if we do break lower. If we bounce up towards this level, I see the Kiwi as a sell. Okay, what do we have next? We have one more USD pair. This one's USD SGD. Again, big sell-off in the USD. Find support, big level. Look at these candles here, just tiny, low volatility, trying to break the resistance level. 20-day moving average is here now at the double trend line. And if we break clear of 140, we should go up to 146, and we'll probably bring our stop up. We just want to see a nice blue through the 140 level. Okay, now in terms of the Singapore dollar, it's one of the most exposed countries to global trade and growth. So it's kind of in the bracket of the commodity currencies. It's not an emerging market currency, but yeah, I like the look of the pair. It's not the fastest moving pair, but I think the upside. That looks really good if you're a long-term trend follower. So plenty of USD pairs to look at, and I quite like the fact that a lot of people are very bearish of the USD. Analysts in the media, economists, etc. And I posted a Harvard graduate, or he works for some big bank, saying the dollar is going to go down by 35%, and the breakdown is imminent. For us, the dollar, yeah, sure, she could go a bit lower, but not going to melt to the downside. The dollar is the global reserve currency. Risk off comes, dollar's going up. Dollar is oversold anyway. So yeah, we're very dollar bullish. Last week was kind of a bit boring because nothing really moved much. But in the week ahead, let's see if we get some upside motion in the USD, more volatility in the Forex markets generally. I think we might well do. Just keep your eye on stocks next week. Could be an interesting week. We shall see. Thanks for watching me. Take care. Have a good day.